as of last week, possibly even this week, very recently, USDC, which is the biggest stablecoin in the crypto ecosystem by volume and by liquidity, and stablecoin, just to kind of like clarify, a stablecoin is a crypto token asset that has its price value pegged to a fiat currency, in this case US dollars, meaning that 1 unit of USDC is always equal to 1 US dollar. And so this stablecoin asset is issued by Circle, and Circle owns Coinbase, and Coinbase launched the Base chain. So very, very quick moving here, obviously, right, with that kind of a connection. They now have native USDC on Coinbase's blockchain, Base chain. And what that means is that if you're now holding USDC in your crypto wallet on the Base blockchain, that USDC is counterparted, like the backing for that dollar is counterparted by Circle, and the backing is held. Circle uses BlackRock to hold its, like, the majority of this backing. And then BlackRock obviously doesn't just hold cash. They mostly invest into 3 and 6 month T-notes. And then there's also a few other bonds and stuff. But for the most part, it's relatively liquid and generating like an amount of interest. But what this means is that when you hold those currencies, like the USDC token, in your wallet on Base chain, its security can be equated directly to the security of holding USDC on Ethereum mainnet, for example, where before this was launched, the options for trading with USDC on the Base blockchain were limited to what are called bridged assets or bridged stablecoins. So the biggest ones were USDBC and AXL USDC. And so, but it could get a little convoluted. Yeah. So
it's like different versions.
Yeah. So stick with me, and I'll explain. I promise it does make sense. But what those assets are, before Circle, the actual party who issues this USDC, who's responsible for maintaining the backing value. So, they're responsible for holding the reserve that is, backing up the tokens that they've issued. And now that they're native, the tokens that you're holding on the Base chain are also directly backed by this institution. Whereas before they were native, the tokens you were holding, for example, USDBC, that was a USDC, so same asset, same issuing authority, so still Circle. But instead of them issuing this USDBC token directly on the blockchain that you're using, Base blockchain, they had issued USDC on Ethereum, on the Ethereum mainnet, which is, as we all know, it can be kind of expensive to transact on. You're expecting to pay like $5 to $15 per transaction, whereas the Base blockchain is like 5 cents. But what you're holding when you trade USDBC is a token on Base blockchain that has a counterpart in USDC on Ethereum mainnet. And then of course the Ethereum mainnet has its counterpart at BlackRock, managed by BlackRock, owned by Circle. And so there is this added layer of risk potential, or a point of failure, if you would, where if for whatever reason this amount of USDC on Ethereum in this backing contract that is being held there to represent USDBC, if there's an indiscrepancy between those two values, it adversely affects BC, because BC is backed by this pool, by the USDC pool on Ethereum mainnet. Whereas if the pool on Ethereum mainnet gets, hacked or stolen or drained in some exploit, the remaining USDC, no one else is affected. No one else is affected by that, because it wouldn't lose peg on Ethereum mainnet, but it would lose peg on Base chain, because Base chain, the asset isn't USDC by Circle, it's USDC by Circle on Ethereum. And So it is a big deal to get a native stablecoin like USDC on base chain, because now you have the ability to transact with the additional,
Basically, you don't need
security.
to bridge.
Yeah, exactly. You're not exposed to a bridge protocol's security. And if you keep track of DeFi hacks, especially the big value ones that make headlines, overwhelmingly those hacks target bridge protocols. And what happens is, the backing of a bridged asset is stolen, and then the bridged asset becomes worthless. And so there is always that risk when you're trading with bridged tokens on layer 2 blockchains. So having native tokens is a huge step forward for people who are willing to take a risk and put millions or hundreds of thousands of dollars into this environment. You want to manage your risk, and this is a huge step in managing your risk by being able to only expose yourself to USDC and directly to Circle and BlackRock's management and all of that stuff, versus adding that additional layer of all of these tokens also have to stay on this mainnet wallet address, and if that address gets taken advantage of, you can be boned. And so, yeah, and then same deal goes for like AXL USDC. That's the same thing, except for with the Axel protocol, which bridges between multiple like blockchains. And when you're trading that token asset, sure, it's worth 1-to-1 with the dollar, as long as its backing counterpart from wherever the mainnet token comes from or the actual native token comes from is still there. So, given the choice between a native or a non-native stablecoin, native is the way to go. And now base chain has native stablecoin in the form of USDC, which again is the biggest stablecoin in the crypto ecosystem by volume, by liquidity, and honestly by legitimacy in institutional backing. BlackRock isn't some unheard of broker. We're not talking. It's not like
trillions of dollars.
Yeah, exactly. It's like one of the companies that owns the world.
Totally.